Hello traders, Gary Wagner here, 11:43 in Honolulu, 5:43 in New York on Tuesday, 18th day of April, 2023, and this is the Daily Report for Gold and Silver. A solid move in gold today, opening and closing well above $2,000 per ounce. We currently have the most active June contract up $10.80 or 0.5%, and fixed at $2,017.80. Partially, it was dollar weakness that gave gold a strong boost to the upside, with the dollar down 0.35% and the index fixed at 101.435. Lastly, silver gained about 0.8%. That is a 20-cent gain, taking the most active May contract to $25.29. Traders, although we have seen pretty wild price fluctuations, one thing is for certain, and that is when we look at the last 10 days in trading, and that begins at this candle right here, which occurs on the 4th day of April, we can easily see that over the last 10 trading days, we have seen gold trade and close above $2,000. In fact, there were only 3 occasions in which it challenged and broke below $2,000 on an intraday basis, but on each occurrence, gold recovered and closed above that key and critically important price point. And what is more impressive is when we look at a short-term 240-minute chart and look at the compression triangle that we identified a while ago, if we extend the lower level support line, when gold prices fell, they did fall just below that on an intraday basis, but for the most part have maintained a price point above that and literally followed this tack to higher pricing. I draw your attention to the next area that could be a technical level of resistance. It is based upon this high that came in just below 2040. I believe it was 2036. We are currently trading at 17. So we could see the market track a little bit higher and then move back down. If that happens, the question is, will it continue to use this as a technical support level that is an ascending trend line? Lastly, we are looking at a daily chart. This is a chart that we have been plotting the series of higher highs and higher lows that began after the triple bottom that began in late September through October and November. Those higher highs continue to occur to current pricing. The question is, with the Federal Reserve FOMC meeting scheduled for the beginning of May and a blackout period to begin on Saturday, this week will be the final week in which we hear Fed officials speak, and that, I believe, can create a lot of volatility, as what we have heard so far have come from 2 hawkish Fed members, both advocating the continuation of rate hikes rather than hinting at any kind of a pause after the expected 0.25% rate hike at the May FOMC meeting. This could pressure gold lower, but once again, we do have solid support above 2,000. The question is whether or not that support will continue to hold as it has. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.